Hi guys, hi, good morning everyone. It's wonderful to be here at HSC Asset Management today in Abu Dhabi. And we have a great panel today to discuss very important questions for institution. So what does the future financial stack look like? From investments, transaction, custody, settlement organizations, and emerging market architecture. We have a great panel that were shortly introduced, but I'll repeat it again. So it's Kevin from Chief Business Officer from Gate, Yana, Head of Institutions BD for Mina at Binance, Jessica, Head of APAC at Bitpanda Technology, and Yoyee, B2B Business Executive at Bybit. So I'll start the question today and set the stage. It's an open question, so please take it whoever wants to. To set the stage, where are we in the digital finance cycle? Are we still in the early innings? Are we in the transition phase? Or is the acceleration started yet, generally for everybody to see? So please, whoever wants to, ladies first.
I'm not sure, is it working? Yeah. Hi everyone, and happy to be here today, so thanks for having me. I'll be institutional advocate today, so what I want to say that 58% of institutions already join digital assets market, meaning they holding crypto, they do some operations, they do some trading, but they are still in one-digit allocation, which is a pretty small one. And their question now is not kind of shall we go into the digital asset space? They already know that they should do that. But the question is more how they can expand and how can they increase the amount of their allocation and increase the amount of their exposure on crypto market without breaking the custody, without breaking their risk and operations. So I want to say, answering your question, that we're definitely not in the very beginning, since you're already seeing very big names joining the market and joining the platforms, and with my peer panelists, and you're all working with quite big institutions within your exchanges. But yeah, we do still have a chance to expand them, and there are more to come. So what do you think, guys? Yeah, I think you're, and from the exchange perspective, how do you think? Do you support that idea?
Yeah, we definitely see the similar trends. That's also one of the missions when we expanded the previous Bybit institutional team into the new B2B business, because we are seeing the variety of our institutional clients has changed and expanded. So not just the previously early adopters of crypto institutional traders, but we see more and more, such as the banks who have a big span of retail clients, asset management from the TRI-FI world, sovereign funds, some of the university endowments, they all start to show interest in allocating crypto assets. As you mentioned, as maybe just as the first experiment, 1% of their allocation. So that is definitely happening. So.
Yes,
I just
Yana.
want to add a little bit more. As Yana and just Bobby before shared, I think this stage is definitely institutional-led. It's not retail-driven. But beyond, we see all these corporates, I want to speak specifically for financial institutions, because what we do at Bitpanda Technology Solutions, we actually help the traditional banks and payment companies, neobanks, to embed all this infrastructure, able to allow them to trade crypto by themselves. So I think this circle is about all these traditional finance institutions. They want to get a faster settlement, safe custody, and able to embed digital asset infra into their existing framework. Thank you.
Kevin?
Well, first of all, thank you for inviting me back here. One thing I would say, just like hack seasons always have the best seats. So I would say, going back to the very original questions, I would say we're mature enough as an industry that it's not going to collapse and just gone. That's good. But still, we're still early enough as the global adaptation rate is just like 6%, 7%. So a lot of potential. But also, we're not too late in the states that we have seen it in banks, we have seen it in accounting firm or dot-com bubbles. we're not in a saturated market where we have to undercut each other. We don't have to cut the operational costs, so we can still invest the money into innovations. In terms of like institution, I think we're going into the stage where, like, first of all, definitely agree with the exposure and the mean to that exposure. So like a lot of hedge fund I used to talk to back in the banking state, they were like, I would just trade on like CME futures. That's easy. CME is something that they deal with in the last decades, and they don't have to deal with us, the crypto exchange. That's great, but also you will see more and more people in institutional space. There's like hedge funds, there's long only like active manager where we're focusing today, and family office, et cetera. And these are the people who's like not like having just the future instruments derivatives is not enough for them. That's why we can now step in and provide them like different kind of services.
Well, I'll follow up that because that's an interesting bridge to actually the next question.
We didn't rehearse this,
No, we
but
didn't,
like, yeah,
we didn't
yeah.
rehearse, but I'll follow up. So Kevin, then I'll let you continue, right? So this means that exchanges are evolving into a full stack financial ecosystems, right?
Yep.
So from products to compliance to institutional services, what is your vision, Gates' vision for what the next generation exchange looks like?
Okay, very good questions. Again, I'm coming from like, by the way, don't do the math. I'm old. I've been like in banking for like 15 years before I moved to crypto 5 years ago. I would say whatever we're discussing these days, in a few years, we won't discuss anymore. Of course, we're celebrating, we're getting license, et cetera, et cetera. We don't see JP Morgan or Citi like talking about the license because that's a given already. So if you don't have a license as an exchange, you won't even get into the institutional space. Now, same with like protocols. I mean, like, I know, Torn, but like, we won't talk about like which kind of like operating system in your office that you use anymore, because like it's actually matter what you build on your operation system. So these are the things going to be agnostic to a lot of institutional players. But yeah, so our vision is exchange is going to be like a really outdated word, just like altcoins or just like banks. Banks like Citibank is going to be like a banking supermarket. You provide all kind of service to your clients in a way that make their capital efficient. So this is what we're building as well. We're focusing on having a right suite of like options, modules, whatever service that will provide like a one-stop service to our institutional clients instead of like arguing whether or not like we have license here or there, or like we're using Solana or Ethereum.
So generally, then you would say, like, because we're actually really bridging everything really well, but so you're saying that we're gonna move past trading, custody, tokenization. Everybody is going to look at you guys basically, like the bigger exchanges, for the advice on Web3, right? So maybe Yana, I'll direct the question to you, right? So what is it actually now? Maybe especially as we are in the Middle East, or generally globally, what are the institutions actually asking for today? Is there certain demands that for example, Binance gets that?
I do agree with Kevin saying that they're not going to do that only as exchange. And for quite a long period of time, we're at Binance, we're not saying that we're only exchange, we're kind of big ecosystem, and an ecosystem that includes kind of very tailored and dedicated product offering for institutional clients. In terms of what they're asking, I think they stopped considering like Bitcoin, Ethereum, whatsoever as a asset class, and they're starting considering crypto more as a blockchain infrastructure and what they can build. We're seeing increasing demand in biggest financial institutions in the world, like trying to integrate crypto from their real world asset side and trying to create their own tokenized assets that could be bound to their entity and to their institution. That is the first thing they're asking. And echoing the thing that I mentioned before, most of them coming to us and saying how to securely keep their assets outside maybe exchange and what kind of custody solutions they may use. And that's why we at Binance Institutional tried to develop different sort of solutions for more crypto-native institutions and for more traditional institutions. We have a tri-party solution now that works together in the bank, and we have a lot of partnering banks who are operating in different regions when institution can allocate their assets directly with the bank, but trading on the crypto exchange and take the crypto exposure without and mitigating the risk of their assets and not just keeping them straightly with an exchange. And I know that most of our colleagues in this space are also trying to integrate those sort of solutions. So that's why I think that it is very important, since people still consider crypto as a high-risk asset, but we need to work together to mitigate those risks and to build and to offer those type of solutions that help institutions to firmly make decision to go for it.
Yoyee, maybe you can start, because I would be personally interesting for an exchange of all your statures, of how you approach institutional onboarding, because it seems like regulation is important, security is important, tech stack is important, right? But I would also have the assumption that once working with such high volumes, with such big capital, there is certain requirements that institutions have, like from a bank perspective. I think that as we're a very young industry, right, the standards are not aligned. So is there a certain way of how you would approach onboarding, or how you would look? Is there discoveries done, or what is important from your perspective of how to do that?
It's interesting that you ask about how the user experience of onboarding is really happening right now with all of the exchanges facing the regulatory requirements heighten up. So I actually totally agree with our friends from Gate and the Binance are saying that we believe later down the years, regulated or licensed will not be a standalone topics for exchanges, because Bybit is really embracing the regulations worldwide. We are getting the license worldwide. Then it's now really based on how the clientele we were facing previously now changed to a more regulated clients, and how our compliance department can work together with this client by meeting their requirements. Bybit's value has always been listen, care, and improve. So we set up a new department, like the B2B business, and together we expanded our legal department as well as the compliance department, because we see more and more demands and requests we previously were not seeing. For example, the audit report, and then the compliance, the technology surveillance, all the licensed questionnaires that our clients are now demanding from Bybit. And luckily that we have everything all cleared out as one of the achievements that among the top exchanges. So at the same time, we are really introducing the custodian services to our clients as well. Unlike the previous very crypto native clients, the new clienteles, the banks, the TRI-FI, asset management, hedge funds, you name it, the financial institutions, they want to diversify their counterparty concentration risk. It's not something we see as a challenge from the exchange. It's actually a win-win situation, because when we provide the solutions and tools such as the banking partnerships, the custodians, as a separate way for people to deposit assets, at the same time, they can still have the access to all of Bybit's trading products. And like on top of that, we also expand the institutional loans and institutional credit for people who use custodians and banks to trade with us. So what's we are really helping with the client. Number one is from the compliance support perspective. Number two is we do not make the trade-off between the security realized from custody and the product offerings, such as the liquidities, the credit, the leverage. So we are really making it a smooth onboarding process for them.
So I think for me it's really interesting to have Jessica also here today. everybody is very interesting, but Jessica especially because I grew up in Austria, where Bitpanda was founded. I was always following the story, what was going on there. And I know for a fact that this institutional onboarding was something which was a pivotal moment also for Bitpanda, because they went into the institutional space. Maybe you can add to this perspective how maybe also if you know the story, it's like why did it go? Because they were very early in that stage saying that they wanted to capitalize on the institutional place. So the onboarding part and everything would be really interesting to hear Bitpanda's perspective.
Thank you. So actually, I never been to Austria. I joined Bitpanda as a Chinese company because I'm half Chinese, called Panda. But interesting, so Bitpanda actually started 11 years ago. It's the first unicorn company in Austria. So we start as B2B broker business, and then expand into B2B arm, which is a part called Bitpanda Technology Solutions. I'm leading the APAC business. So for us, currently the focus is empower and enable all these traditional finance institutions to able to trade, custody, crypto assets within their own tech stack. So for us, the onboarding experience is very different with previously all this broker or exchange business models. So for example, I took custody as example. For retail or exchange perspective, previously it's all about the wallet, it's about the convenience, it's about the volume. But currently what we care about, they want the safety, they want the asset aggregation, they want infra which is combined with the cold wallet security and the hot wallet flexibility. So that's exactly what Bitpanda is built. We actually provide custody solutions for Deutsche Banks and Societe Generale Forge and LBBW. In here, we partner with Rock Bank, providing trading services and in discussion about custody solution as well. So what I think for institution onboarding for Bitpanda Technology Solutions perspective, the security, the compliance, and the highest and bank grade security is the most important. Thank you.
I also want to add one thing here. We're talking a lot on the institutional perspective and custody solution, but I also want to mention that this personalized approach in digital asset space, it's really a key. And we're all kind of trying to set up a sales team and people to talk directly with our clients. And I have never been thinking that in crypto and in digital assets field, it might be so important because like for compliance, for onboarding perspective, for advisory, for different sort of recommendations, even on what kind of products you may use, we need people here and people do really love to catch up in person. And I think even like that we're gathering here today, it's a good opportunity to discuss that like back to back and to see real people. And it is very important aspect in our field that there should be a real manager, sales representative who can work directly with you. And I think like all of us trying to provide this sort of experience, and in Binance we also have a very big sales institutional team who are speaking more than 20 languages, like, and each of this person can approach you and to try to help out and step in whenever needed.
So also the general vibe then what I'm getting here is like we're just maturing, we're becoming more corporate, also from all the divisions, the departments that cater to the different needs of the clients. It doesn't matter if it's high volume traders, institutions, or high net worth individuals. I think we're getting to like institutional grade. So I think a good topic, because it was mentioned a couple of times now, was custody and settlement, right? I would just maybe give that question out to the panel, just generally. So for me, custody is not a standalone box anymore. I think today it's programmable, it's integrated, it's compliance oriented, right? So what does true institutional grade custody look like now? And what are the challenges that still remain that you would love to be solved maybe in the future, right? With that, what is the perspective that goes into?
Okay, I would say right now we're still talking about custody, but like I would love to have a time that we don't talk about custody anymore. It just like works in the background, and I don't have to talk care about it. That's happened in the traditional finance as well. It is how like everything's behind the scenes, like they dealt with the dividends, they dealt with the voting rights, etc. They make sure like they being like a PB, like a prime brokerage, and you can use your asset in the custodians like efficiently across different brokers, in our case, different exchange as well. These are the things that like people from the front and talking to the traders or the PMs day to day, they shouldn't care about it. The only times that I cared about custody and settlement and etc. back in the days is when there's a failed settlement and when there's a problem.
Yeah.
And that's the things that we don't want to face. So I guess our only problem here is like because in traditional finance, again, there's like a centralized, usually for each jurisdictions, there's a centralized clearing and delivery body. Usually it's the official exchange. We don't, right? So like, how do you have like a standard like settlement instruction across all the exchange for the same clients? How do you make sure like do you have the right settlement dates because of like different credits like arrangement we have across different exchanges? I think these are the things that that's why we sit down. That's why at the very beginning, before we come on the stage, we are not enemies, we're not competitors. We need to work together in different exchange for our clients.
Yes, absolutely. I'll open. If somebody want to add something to that?
I think custody in the future wasn't about the debate about the cold wallet or the hot wallet. It isn't about debate about the speed or the security, but instead, I was expecting in the future the custody solution could be able to provide both simultaneously. So that's a direction we're towards into.
Exactly, yeah. I think as Kevin mentioned, like we're trying to understand like which kind of custody solution to offer to our clients, and that's why we need to develop different sort of custody solution. Even what I mentioned, like the tri-party, when you're allocating fiat assets and T-bills into the bank, it also can be considered as a custody, right? Because you're still keeping assets with a tri-party bank, but you need to allow the institution to trade it on exchange. And since most of the institutions, they are trying to use different exchanges, it is also a question on how to allow them to use it for different venues, not only for the one, and it is more a TradFi custody. There are also some other more crypto-friendly and more crypto-native custodies. We have a Cefu, which is our partner in custody solution, which allows to hold assets, but also can give a mirror opportunity, meaning that you can trade those assets on the exchange while not taking the exchange risk of holding assets. And that's the question. And we're still having questions and people still saying that it's not enough and they need to add something else, and they're not happy like that is not allowed like to trade on different exchanges. So that's the question, and we're still trying to develop the best solution for the institutional grade custody specifically. So yeah, I think there are already custody in place within different venues, but there is still a matter of how to allow and how to diversify the risk and how to allow to access different venues within one custody solution or within few custodies.
And maybe do you see it? Do you see it also like that? Do we need to work together more to maybe establish some rules or dialogue to maybe exchange? Maybe today will be a spark to talk together more.
So from our perspective, I think that when clients, when they demand custodies, it's actually, so the conversation might start with securities. They want to have more transparency of the assets they hold. They want to have more controls of the assets they hold to reduce risk and to enhance the security. However, they don't just demand custody for the sake of having a custody. At the end of the day, we should really look at the essence of why people want to have the assets sitting with you or someone else as a custodian partners. The true thing, ultimate goal, everybody participating in exchange and trading environment is definitely to make profit. So the clients, they want to trade in a better way to lower the risk and deliver a higher profit. Therefore, when we adopt the custodian models, either through a tri-party agreement or off-exchange solutions, the very immediate next hot topics that I believe all of the exchanges partners here we are facing is how to improve the capital efficiency. That's the key. We really try to deliver value to our clients because, you know, when your asset sits with custodians, they want to do cross-exchange arbitrage tradings, or sometimes we have the infrastructure gap between banks versus the speed of the crypto. So we are trying to improve the capital efficiency, not sacrificing it when we introduce the custodian solutions on top of the securities, the lowered risk. So that I think is the key target we are solving right now with all these custodian setups.
So I was just from everybody actually listening to, so security matters a lot, adaptation matters a lot. So we're today in Abu Dhabi. So the MENA region and the UAE, in my opinion, represent both those measures as from how the country was founded, what the leaders represent here. So especially in the UAE, it's positioning itself as a global hub. There is a lot of regulation, a lot of clarity coming for the leadership of the UAE to actually impose, accelerate this kind of dialogue, this kind of talk. So how important is then regulation or clarity, institutional adaptation here, maybe as a sign on a blueprint for the world, and what needs to happen for new capital waves to enter our field, right? Because I think we want to shift the assets from one way to another. So I'll open up again, whoever wants to.
Okay,
go.
I'll make it really quick. I think, yeah, regulations is really important. Of course, I think that's established. But I think UAE have like a very unique like position. Is like, as you said, it's a really young country, and in the like of Singapore, Hong Kong, Japan, or like in Europe, they already have a financial system in place, traditional financial system in place. It's kind of a legacy, and there's a kind of like a tension between like what you can actually do and not. Like here, we can start with a flash, and then we can have the rule from like building from the ground up. So that's actually helped quite a lot. The other thing is like, how do we gonna like attract the capital? I think one of the things, like we didn't mention it, it was kind of the hot topic earlier this year. I'm surprised we didn't touch on right now. It's like RWA and tokenizations, because like if you tokenize, for example, equities and stocks, then you can have those capital in exchange, and you don't have to go through the hustle of like going on and off ramp to rotate into different sectors. So like crypto may not be doing the best. I mean, it's still very good, by the way. It's still a very good price right now. But like if the asset managers want to rotate, they don't have to go off ramp and go to US stocks. They just go for the tokenized version of it, staying with the exchange. I think that's key, because like that give the asset managers options to make, again, the capital efficient.
Cool.
I want to add a little bit why MENA is being a front runner, especially UAE, as a digital assets space. I think because this is a place where the capital, the sovereign capital, and the regulatory framework and the innovation are combined together. That's why when it all happens together, it's never happening in other part of the world. They definitely become a front runner and leader in this space. So I'm very optimistic about what we're going to do, Bitpanda Technology Solutions going to do in UAE. We currently are running under VARA's regulation. We have broker-dealer and the custody license under VARA, and have an office in here established 2 years ago as well.
I cannot mention that like we received our ADGM license a few days ago for our global exchange for Binance.com, and it's a big win for Binance and for our institutional division especially, because the MENA region, Dubai and Abu Dhabi is such a big hubs, which represents a great convergence of TradFi and crypto, where people with a TradFi background can come and settle their business, and they can step into the digital assets field with all the regulatory frameworks, with most of the top crypto exchanges operating here, and they can make it fast and easily in comparison with many other countries. And we're also seeing how many expats are coming here, setting up their entities, setting up their funds, and local sovereign funds and family offices are also looking into digital assets field now, and they are kind of very interesting since it's the kind of main place, I think, in the world, one of the main places in the world, the MENA region, where the digital assets field is such developed.
I cannot agree more that when regulations, capital, and technology, and also all the talents meets here, that sets the advantage. Bybit has set our headquarters in the UAE region long ago, and we are really happy to see, the regulations now become more and more clear. That's the clarity and the certainty that welcome this technology innovations really promotes the growth and the conversations happening here. That's what makes the environment more vivid, and we are super optimistic about the future that the UAE will be welcoming and hosting more and more crypto innovations, projects, capital inflows. So we are happy that our headquarters stays in the UAE. That gives us the global coverage for growing the business in the longer term.
Perfect.
I also want to say that in this region, it's not only for kind of very big financial institutions. It also allows to settle a proprietary trading fund for some smaller firms and to start your own digital assets business very, very fast.
Yeah.
So I think for our audience, if any of you looking into digital assets from the business perspective and to start your corporate entity, it's a very good place to do that.
Yeah, I couldn't agree more, and I just picked up one question from Kevin that maybe ties in well, because UAE did a lot of innovations, especially if because we have a little bit of time, could just maybe do a small dive into RWAs, also the perspective of the exchanges and how they stand to it. But talking about the UAE, talking about Dubai, for example, the Avara framework that was done for real estate was first and second to none. At first, allowing actually RWAs to work in the way they were supposed to be. And I think what ties into that later on, which we haven't reached that yet due to regulation, but I think that the interesting part would be the secondary market that would run over the exchanges, right? That would be a field that once everything is tied together and the bouquet is has a nice bow on it, I think that would be a very interesting also asset class that will then come to the exchanges. So maybe a couple of words about what is the future of RWAs as a perspective of 4 exchanges sitting on stage. What is it that is important? Maybe when do you think that we will start moving in that direction?
Okay, short answer is that's a little bit of overhype. We can all agree that's like RWAs we've been talking a lot about, but the one main thing is RWA tokenization will help with the liquidity. It will increase the liquidity, but it will not increase the demand. It depends on the underlying, right? If the properties in Dubai is not doing good, no one's going to buy the RWA anyway. So I think that's the things that exchanging can help with the liquidity, can help with like how efficiently you can buy and sell the RWA tokens, but it still depends on how the underlyings perform.
So I probably add a little bit. I think I agree with Kevin. I think RWA is overhyped right now. I think because RWA basically you're doing tokenization of real assets, but actually what I think the real adoption gonna scaling for tokenized assets is gonna be tokenized money, which is stable coins. It's facility cross-border payment. It facilitates corporate treasury. It significantly reduces the settlement time and cost for the traditional payment systems. And the second, I think, going to be tokenized money market fund. That's going to be scaling because it's actually solved a lot of problems the traditional markets already have. For any illiquid or unregulated, uncleared, or hard to supervise other assets, we are still in a very early stage for broad adoption.
Yeah, just it's important to avoid tokenization in sake of tokenization. We're seeing as BlackRock launch its Bitl fund, yeah, it's also tokenized equity, but it's important to see how liquidity goes and who provides those liquidity and who is actually purchasing and giving a liquidity of collateral of their underlying asset. So now we're seeing as bigger financial institution may launch it, but it's also important to see how those tokenized funds gonna work with a smaller business perspective and how it's gonna operate inside of the general crypto liquidity and how it may move on from the traditional digital assets into tokenized assets. So I think there are still a lot of questions in the field, but we're seeing demand. We're seeing demand from traditional institutions to take exposure on those that is already launched. But yeah, I think there are still a lot of questions and still a lot of work of how it's going to be presented in the market and how liquidity in this market going to work.
Yoyee?
Interesting to hear that the friend thinks it's a bit too hyper around RWA because Bybit is actually pretty heavy on RWA. We have successfully launched 2 of the RWA tokens. One's in collaboration with Qatar National Bank. That's the first regulated RWA token called QCDT. And the other one, we were in collaboration with UBS for their UMint RWA tokens. So for all of these RWA tokens that our clients are able to enjoying the underlying T-bills and the money market fund returns, just to trade as any of the stable coins, at the same time enjoying the leverages, the liquidities that we offer. So that's a nice additional layer of returns to our clients. But I do agree with that the whole RWA topic delivers mixed messages and products to the market. So what we are really looking at are the ones that's standardized with a high liquidity, so they are tradable. That can deliver more liquidity and the tradabilities onto the secondary market. And also, we have our mental ecosystem that is a layer 2 chain that we really align on the strategic movements that we welcome all the RWA tokens, not just within the exchange and trading environment, but also the bigger of the TriFi and DeFi and the whole crypto ecosystem to grow their RWA projects on our mental chain. So from Bybit's perspective, we really think that's one of the many opportunities that we see demand in the near future, and we are ready to cultivate their growth.
It's really interesting because my advisory group also, we work with a lot of startups that are fundraising. There's a lot of talk on RWAs, but for me, I share the prosperity for RWAs as well, but to be honest, in the last 5 years, the talk was ongoing and nothing really developed in that space fully, where it's interesting also for institutions, for bigger players like yourselves. I hope it will change. I think there is some leaders in this space, like Robinhood, for example, that was going to X stocks and in this direction that kind of forces adaptation. But I completely agree. I think that from an exchange perspective, we need to get to the point where it's actually a tradable asset that has liquidity, that can be interoperable with crypto, with payments, with stables, rules. But regulation has to catch up, first of all. And I think stable coins, like was just mentioned, will help to that because they will enable payment corridors that will allow this to trade. So we're gonna come to an end, and I have maybe 2 questions left for everybody, just also to see the perspective, because we started all together, and then on the RWA angle we shifted away. But it would be interesting to know if you have one practical advice for an institutional allocator that might be seeing this in content or here in the room, or building digital asset strategies for next year now in 2026. What would you tell them? What would you want to see that What do you want to know? That there is more capital flow, that there is more demand, that there's more conversations. What is the perspective of you guys? What would you like to see, or what advice would you give them?
Practical advice. So I would say, you have some buzz. Like by the end of this thing, just like MicroStrategy is not actually a trading strategies.
Yes.
It's if you want to go long, you have to hash it. Either you go long short, you go like a quant strategies, or if you're going long only, you diversify. The way that he did it is being very lucky and with the right trend. That's not going to be like repeatable in the futures for every asset manager out there. So I think this is me just being really old school. I'm like more like a modern portfolio theory guy, and I'm sure like all the PM will share the same sentiments as I do as well. So yeah, if you go long, diversify, or otherwise hash your bet.
I think my advice is, I mean, in the future, like it's not, you still need to thinking whether should I have a digital asset strategy or not. You should think it's how fast I can deploy my digital asset strategy, because everyone gonna do that. If you're life behind, and you're gonna lose this game. And the good thing is you don't have to build in-house your infra. You can just partner with us. We can help you deploy your digital asset trading and custody solutions as fast as 3 to 4 months.
I'd really love institutions to stop thinking about crypto as an asset class only, but also to go for it as a blockchain infrastructure. Yeah. As we discussed with my fellow panelists, that there are a lot of ways to join digital asset space right now, starting from holdings and going up to, I don't know, HFT trading or liquidity provision. It just depends on what business nature the institution run. So we're very glad to see an institutional demand, but we also like to see them to consider it from different angles, not only from like just I buy it long term and I just keep it, but also to take real part and pay real contribution into this space so it can develop more and more.
If for one practical advice, I will give a very short one, that is stop waiting. Because we see the first early adopters before the FTX in this incident, many of the TradFi institution clients actually shied away because of what's happening in crypto. Now we are seeing a new wave of adoption that are encouraged nowadays. But then still, many of them are still preparing. So I guess the advice I would like to offer is that your peers are already entering the fields. They are no longer just preparing. So maybe a small amount to start first, to experiment first, then it would really change a lot of things and make the progress faster than expected.
Cool. Well, thank you very much. It was really interesting to see for me, especially because you represent big names in the industry, and it's very interesting to see that you all basically think alike about the current situation, but there is some discrepancies about the future, which is good because that brings innovation. What I would take from today's conversation is that if this message goes out to the institutions of the world and everybody that is working and trying to get into the blockchain space, into Web3, into crypto, I think one thing that I've noticed a lot, that you are preparing to cater to them with discoveries, with different products. And I think that what they should do is actually foster the conversation with you. I think everybody is open to that conversation. I think everybody is preparing. Everybody understands the needs of those institutions. And I think that those kind of conferences like HSC, like Abu Dhabi Finance Week, like the government here actually make this conversation possible. So thank you very much for the insights. Thank you, HSC Asset Management and the team, for giving us the opportunity to have a short discussion about the future and about the current situation. Thank you very much, guys.
Yeah, thank you.